straight to the moon, get your ticket now. Everybody line up, get your tickets, we're going. Did you buy the tip? Yeah. Do you like rocket ships? Oh, what you wanna try this shit? Yeah. We got everything you need, you better buy some bitty now. Everybody, long live Ponzi. Everybody, long live Ponzi. Love the Ponzi ride. Never short it. Bitcoin's back, alright.
Alrighty everybody, welcome to Satoshi's Bitcoin Chart Show. Today is Tuesday the 1st of June 2021, and as ever today we're going to run through the figures, but also we're going to dedicate this show to a celebrity of sorts. And so today's show is going to go to this chap. Let's just bring it up, here we go. Mr. Zuby Music himself, as likes to tell everybody, you know, Oxford University graduate. Obviously appreciates the significance of intellectual conversation. Otherwise he wouldn't be saying, look, I've got the credentials, Oxford University graduate. So obviously, likes to think about things. Probably gets a bit annoyed by stupid things. And so hopefully I'm going to clear a few things up today in the fundamental figures, especially for you today, Mr. Zuby Music. So without any further ado, let's just jump straight into it. Rock and roll. So, for educational purposes, obviously, this here is the first chart we're going to look at. So, Zoobs, if you're wondering why we call BSV Bitcoin and why Bitcoin is BSV, well, it's because the protocol started at the Genesis block and it hasn't changed right the way through. All that's happened is that it had a change of ticker symbol when Coolcoin, which is BTC, changed the protocol to centralize it under the control of Blockstream, which crashed its fundamental value to zero because it's no longer a commodity as it's centralized under Blockstream and is therefore a security. And if you don't believe me and you're an intellectual, I'm just going to play you a quick clip of Sam Samao, who is the Chief Strategy Officer at Blockstream, explaining that Blockstream control it. So if you do like your bit of intellectual banter, have a listen to this. Here we go.
Bitcoin was created by the central bankers that enslave you today. It is their scapegoat.
How do you answer those, Max and Stacey?
I think the evidence is clear that they do not control it. There's 10 years, almost 11 years now of track record.
Yeah, Blockstream controls it.
I'm sorry, go ahead. Who does?
Blockstream.
Oh dear. Shall we cue the nervous laughter?
Oh, all right. I was looking at you when I said that.
Yeah, I'm a block. I have a spy. I'm one of the spies. No, so this, it's an interesting.
It certainly is interesting now that there's about that, Max. So I hope you enjoyed that, Zuby. And here's another one. And I saw you on this guy's show the other day. So, obviously Bitcoin had the original protocol. Let's have a listen to a chomp whose show you have already been on, trying to have intellectual conversation with. Just have a listen to what he has to say and see if you recognize who it is. Here we go.
Bitcoin is so different now from when Satoshi was here. It's a completely different project. It doesn't matter who Satoshi is anymore. Even if Satoshi came back, I don't think he would just be immediately welcomed as having this God-given right to decide what happens with Bitcoin. I think he would have to earn his right back into the project. Bitcoin is built based on consensus now.
Are you
Bitcoin
sure about that, Pete? Because it really didn't sound like it to me. Shall we have that one more time? What's Bitcoin built on?
Is built based on consensus now.
Oh, great stuff! And one more time. Tell us again, Pete.
Is built based on consensus now.
One more time.
Have to earn his right back into the project. Bitcoin is built based on consensus now.
I love it. Oh, Oh dear, honestly. Never a dull moment in crypto. And Zuby, one more for you here from, well, you probably guessed the character in this, but this is Tony Vase. So take the floor, Tony Vase.
Why do you think BTC is valuable?
It's valuable because it's the only unconfiscatable asset we have, and that is because that comes from its decentralization. I think Bitcoin is the only valuable crypto asset we have because of the nature of how it started in its first few years.
And when you say Bitcoin, you mean BTC, right?
Absolutely.
But are you aware that in 2017 they changed the rules so that BTC no longer follows the Bitcoin white paper?
That is not true at all.
The white paper says that there needs to be a chain of signatures.
Sure.
Okay, so that's not what we have anymore. That's how SegWit changed that.
Okay, but it's still Bitcoin, right?
Oh dear, honestly, I do love the intellectual humour in this space. Zuby, hope you're enjoying listening to that. So the reason the signatures are really important is because in a neutral system, the way you prevent and stop an individual or a group of individuals from centralizing control of the network is by making sure that everybody in the network is held accountable. So therefore, nobody could do anything on the network that no one else knows about. And this is why Satoshi Nakamoto designed Bitcoin as a chain of signatures, which is why that statement that Daniel Kraus made there was so important. And as you can see here, on the 24th of August 2017, a group of developers called Blockstream got together and implemented what they called a soft fork called SegWit. Now, technically, you could say that SegWit was a soft fork. Fundamentally, SegWit was a hard fork, but politically, SegWit was a coup d'etat. That's that they took over the network, and they made up this cock and bull story about how it makes more room in the block. Well, at what cost? At centralizing the network and crashing its fundamental value to zero. No, thank you. That's really not what we want. If you need more room in the block, you just simply increase the block size. That is what scales the network. It doesn't change it in any way, shape, or form. So these shitcoiners will argue that, it's increasing the block size reduces decentralization. No. These are the 5 pillars of decentralization that I've outlined right here in the top left of this image. Accountability, chain of signatures. So as I said before, Satoshi designed Bitcoin with a chain of signatures to hold all users on the system to account. This way, no one could do anything on the network that no one else would know about. This is what makes all users equal to one another. A locked protocol. If it cannot be changed, then no one can control it. Infinite scale. This means that there is always new market to compete for. Without infinite scale capability, new market cannot be created, and the only alternative is to take market share away from competitors, which leads to centralization. Competition. This is essential for a decentralized network. If there is no competition, there is simply collusion for self-interest and not for that of the network and its users. So, for example, in proof of stake and pre-mine and all these other networks, there is no competition between those who economically sustain the network, which means they act effectively like a multinational company. A multinational company might be distributed, but it is not decentralized. It is absolutely centralized. So with proof of stake, for example, it's all the stakeholders that centralize the network because there is no competition between them. Now, if you are if you've got any level of intelligence whatsoever and know anything about economics, you should know that it is competition that is absolutely essential for decentralization. And finally, a fixed supply, which means that no one can control it. A fixed supply is just as important as a locked protocol for the same reason, so that no one can control it. And there we go. So we just move along a bit. So obviously we know Blockstream socially engineered control of the ticker symbol, but changed the protocol by spinning this blag that only really sort of like intellectually challenged people believe. Unfortunately, there's a lot of them. So the protocol just simply had to continue under another ticker symbol. And then the same stuff happened. Would you believe it? Well, probably yes, because of the amount of shenanigans that are going on in space here. So I'm just going to find here another clip from a person you might know called Roger Ver, who led this chain split, who again wanted to centralize the network by tampering with the signatures, by adding Schnorr signatures and cash fusion, and basically making it illegal so that international trade and global commerce could never use Bitcoin as a medium of exchange. And if you don't believe me, just have a listen to him explain it himself. Take the floor, Roger Ver.
I have a question here from Satoshi, defender of Bitcoin.
That's me.
He said, if a cryptocurrency is anonymous, like BCH, I don't think BCH is anonymous, but maybe there is something.
Check out cashfusion.com and you combine that with reusable payment codes and you get Bitcoin Cash in the same sort of ballpark of privacy as Monero. It's really awesome. So you can check out Cashfusion. And I always get it wrong. I think it's .com, but it might be .org. So you can check both. Cashfusion.com.
Okay, awesome. So BCH, maybe using Cash Fusion and XMR, if they're anonymous, how can a business get legal recourse against a supplier if the supplier defaults and no proof on the transaction exists because anon?
Yeah, if you want your cryptocurrency to be perfectly legal for everything all the time, just go use your Visa card. Just go use your PayPal, right? What do you need a cryptocurrency for? You can do all of it with a centralized, fully legal and fully compliant payment platform, right? So go use PayPal. I think you've missed the entire point. The entire point of cryptocurrencies is that by technological design, they are beyond the reach of the law. They're above the law. That's why, imagine if Bitcoin could have been shut down by governments, they probably would have shut it down from right out of the gate. And it's the fact that Bitcoin can't be shut down. We should ask the BSVers this: if they pass a law saying BSV needs to shut down their blockchain, are they going to obey and shut down their BSV blockchain? I hope the answer would be no. Which is just a lot of the stuff I see from some of these BSVers are silly. But then there's other BSV fans that, I'm very, very sympathetic to their way of thinking. But the ones that say that the blockchains all need to be legally compliant about everything all the time, just go use your Visa card.
Unbelievable. Literally. So Zuby, if you heard that, if you've ever heard like teenagers talk, same kind of language, absolutely ridiculous. Oh, it's illegal, they can't shut it down. Well, afraid not. They could shut it down in a heartbeat. The reason they haven't shut it down yet is because Bitcoin is a commodity. It is regulatory compliant. The moment you make it illegal, the moment you make it break the law, you are literally giving the government the go-ahead to go ahead and shut it down. Do you really want to be holding or invested in anything that the government can just simply shut down? It is absolutely ridiculous. That's why sort of intelligent people do get extremely frustrated with other people in the space, because the level of stupidity is literally like something I have never experienced before in my life. But other intelligent people, understand at least now that it's a con game. But they don't understand the politics or the fundamentals of Bitcoin. But they understand what's gone on. So if you don't believe that, just have a listen to Chamath Palihapitiya explaining that himself. He knows exactly what this thing is now.
This is a thing that either goes to roughly the value of gold, and at the time it was about $100 a coin, and so there's very little downside. There's all this asymmetric upside. I said, take 1% of your net worth and buy this schmuck insurance. This is now a confidence game, right? There is no real utility in this.
You just called it a confidence game, which is a con game.
And we've done okay.
It's a con
the economy's
game.
built.
Unbelievable. Right, so this utility, when he said there's no utility in this thing, we are just simply going to solve this and get over this right now by going through the fundamental figures. So if you want to, just carry on with this journey and watch the rest of my show, feel free. Check it out. Here we go. Rock and roll. Starting off with our favourite, which is CoinDance. This is the Bitcoin forecast, the strength of the system, the health of the network, where we find out what's up with what is going down. Here we go. So we've got Bitcoin. CoinDance reporting it as 171. Prev in the top left of the screen frame saying 170. So that's pretty close to it. It's pretty good. Hash rate 0.4% on Bitcoin, 2% for Bcrash, 97.6% for Corecoin. Network nodes 1.8 for Bitcoin, 8.1 for Bcrash, 90.1 for Corecoin. Transactions, look at this, over 54% of the transactions on the Bitcoin network, 54.1 for Bitcoin, 11.4 for Bcrash, absolutely pathetic, and 34.5 for Corecoin, even though they don't want people to use it. Why is people using it? Absolutely insane. And the block size, look at this, Bitcoin absolutely smashing it. Now the reason this is down the bottom is because the block size represents the data flowing through the chain. And this is what Bitcoin is all about. Bitcoin is the world's first and largest ever data management system that offers data sovereignty, data security, data efficiencies. Because when you upload data onto the Bitcoin blockchain, you own that data because you upload it through a network of decentralized, distributed mining networks who are all competing with one another for your business. Which means they don't hold any responsibility for it. So, for example, if you upload data onto Facebook, Twitter, YouTube, or anything like that, because you are uploading it to their servers, they then own and control your data, which is why they track it, monitor it, sell it, and make loads of money from it. But effectively, you're giving up your privacy, whereas you simply upload it to the Bitcoin network, and you have sovereignty over that data. Nobody can track it, hack it, alter it, change it, delete it. You own that data. You have full responsibility for that data. This is what Bitcoin is all about. And you can only upload your data to the Bitcoin network with Bitcoin. It is Bitcoin that financially and economically sustains this process of data sovereignty. That's what it's all about. People might say to themselves, oh, I don't get it. How do I access data when it's on the blockchain? Well, when it's on the blockchain, you access it like it was on any other website. You can play the data files that you uploaded, play music, play videos, movies, whatever you want, it's on there. The only time you ever pay for something is when you make an alteration to that data file. That is it, because it's that alteration that has to be timestamped so people can see when, where, and who did it. That's what it's all about. This is what makes Bitcoin so valuable. It is literally, Bitcoin is the most valuable commodity this planet has ever had, which means it is likely to become the most valuable commodity on Earth. But not if you can't use it. So you can't use it if it's illegal, which these shitcoins here want it to be. And BTC, you're not even meant to use it. I mean, look at the block size. They've had control of this chain since 2017, but the chain has existed since the Genesis block. What? And they've only got 16.2% of the block size. Can you spot Bitcoin? So this is what happens. Transactions follow block size, network nodes follow transactions, and hash rate follow network nodes. And then the hash rate follows the price. That's how it works, as you'll see in a minute. So these are the foundations down here, and as you can see, they are being built. Whereas this one is top heavy, it is going to collapse, and Bcrash is just completely irrelevant. It's absolutely pathetic. But let's carry on and have a look at these. So just for lulz, we're just going to play Spot the Biggest Block on Bcrash. But before we do that, we'll just have a listen to Roger calling it Bcrash himself for lulz, because that's why I call it Bcrash myself. Take the floor, Roger. Durr.
And we're going to really spread Bitcoin crash across the entire country here in Antigua.
Yes, you did hear that correctly. He did say that. So let's see what we got here. Oh dear, a 1 megabyte block. Is that it? Oh no, 1.1. A 1.1. Dear, oh dear, a 1.1 megabyte block. Is that all they've got? Let's have a quick look at Corecoin here. But before we do this, we'll just have a chat with our favourite guest on the show, Michael Saylor, or Michael Baby, as I like to call him. So, Michael, welcome to the show. Listen, I was reading through the Bitcoin white paper myself the other day, and I was thinking about changing it, like effing it up so it couldn't work. I was thinking about, segregating the signatures so that I could, control the network myself. I was thinking about implementing replace by fee and child pays for parent, and developing on the second layer so that effectively the miners will starve and they won't be able to economically sustain the network and it will collapse. What do you think about all those changes, Michael? Tell us.
I like Bitcoin the way it is.
Oh, well, good for you, Michael. But we really like it too. How do you compete with that?
In fact, I love Bitcoin the way it is.
Oh, well, you can't just leave it there, Michael. If you're saying that you love Bitcoin the way it is, you need to explain yourself. So, what is it about Bitcoin that you love?
The way it's currently constructed, it is possible to put all $250 trillion of monetary energy.
Whoa, $250 trillion of monetary energy. I love the sound of that. Where's that going to go?
in big blocks of encrypted energy on the blockchain.
Wow, big blocks of encrypted energy on the blockchain. You know, can you elaborate on that? What kind of numbers are we talking about?
Maybe the Bitcoin will be $1 million. You can probably calculate $10 million of Bitcoin or something.
Whoa, $10 million per Bitcoin or something. I mean, how's that going to fit and where's it going to go?
Big blocks, $100 million chunks on the blockchain.
Thank you for that, Michael. Right, so in honour of you, let's have a look for these big blocks. 1.3, 1.5. Oh, we've got 2 megabyte block on Coolcoin. 2.2. Oh. 2.1, is that 2.2? And there we go. And in the meantime, let's have a look at Bitcoin. So we're looking at big and small blocks here. Small blocks because the shitcoin enterprises on the chain will be spitting feathers when they see small blocks that doesn't have too much energy put into it. But look at this, like 9 megabytes, 31, 21, 11, 21, 5, 8, 30, 90. A 90 megabyte block from Hathor. 36, 11, 4, 3, 9, 8, 14. 10, 8, 5, 22, 11. All this data. Beautiful. And let's look at small blocks so I can see a 2.3 kilobyte block from Hathor. That is quite funny. 2.7, 2.35, and that's it. There we go. Hash rate. So again, hash rate follows price, follows value, follows utility, follows creativity, initiative, and intelligence. If you are intelligent and you apply creativity and initiative, you can make something useful. When something is useful, it can then create value, and it creates value, it can then develop a price. When it develops a price, it can then be measured against the cost of other goods and services and used as a medium of exchange. That's how Bitcoin works. So, proof of work by network, Coolcoin Bcrash will fall into their own footprint like the Twin Towers very soon. That's Bcrash Bitcoin hash rate, Bcrash Bitcoin proof of work, who cares? Look at, wow, let's have a look at this. I'm just going to get my calculator out for this one. So it is currently 18,900 times cheaper to transact on Bitcoin over Coolcoin. So we're just going to compare that to Bcrash as well. So 18,937 divided by 1,551. So it is 12.2 times cheaper to transact on Bitcoin than Bcrash. Dear oh dear. It's currently 5.9% more profitable to mine on Coolcoin. Shows you the demand for Bitcoin. Who cares about Bcrash? Look at this. So daily average Bitcoin block size by network. Again, data flowing through the chain. Bitcoin absolutely smashing it. Absolutely smashing it. Transactions by network. Bitcoin winning. Transactions per block by network. Bitcoin winning. Thank you, CoinDance. Let's get back to where we were. Thank you. Here we go. Daily average Bitcoin fees by network. So again, this is fees in the block. Fees will come with transaction volume. That's what it's all about, because those who economically sustain the network, the miners and the payment processors, put all their effort into increasing the value of Bitcoin because it is fixed in supply. So therefore the whole point of it is to increase the value of it when you can no longer increase the supply, like inflate it like you do with fiat currency that is so destructive, because people just simply want to make more and more and more and more of it, which is why they have to use built-in obsolescence. Just a tremendous waste in fiat currency. Whereas imagine you're holding something that you now want to add value to. That's what it's all about. So again, fee satoshis, again, it's adding value. So this is a daily Bitcoin fee stroke block reward ratio. So again, this is the percentage here. We're going to follow this over time because we're expecting huge increases in the price and the transaction fees within the block due to the volume of transactions. So we'll monitor that. Look at this daily accumulated Bitcoin blockchain growth by network. You can see the gap here, as they say on the London Underground. Mind the gap. Oh yeah. So talking about that gap there, let's just have a quick look at the actual growth. See where we are here. So Zuby, if you haven't seen this before, wow, check this out. So it says here, the Bitcoin SV blockchain, so that's Bitcoin, has grown by 10 gigabytes more than BTC, which means there is more data volume, data weight, data value on chain. Not price value, but data value. So absolutely brilliant. Love it. Love what I'm seeing there. Love what I'm seeing there. And you can see, look, the chain is becoming, there's more and more weight of the data going chain. That is clearly heading to the moon, should we say. And price is the last metric. Price is the last thing to move, which means it's the least of all metric that matters. So that's why I do the fundamental charts rather than the price charts, because price doesn't mean jack shit, because it's dependent on the knowledge of crowds, and the knowledge of crowds is very limited at the moment. You know, intellectually challenged and extremely ignorant, unfortunately. So this is global hash rate 7 days, not as relevant or significant as global hash rate 24 hours. We're just going to compare this to Coolcoin. So pretty much identical there. So we've just got BTC.com and Binance trading places. Other than that, pretty much identical. Yeah, as you'd expect, really. Let's have a look at Bcrash. All these shitcoin enterprises on it. Oh, look at that. Hathor. Ha! Hathor, their hash rate on the Bcrash network is right down. Let's just have a quick look at the profitability. So it's only 1.3% more profitable to mine on Bcrash than Coolcoin. Hathor has well and truly ruined their party. That's hilarious. That's hilarious. Hathor mining on there for no other reason other than sheer spite. Look at this. Look at this. Wow. Wow. See, that's why it is 5.9%. Oh no, 3. So 3.3% more profitable to mine on Coolcoin than Bitcoin, because this is BSV. Look at these competing parties. Tal and Hathor absolutely macking it. But look at this. Oh, look, via BTC being squeezed off the chain. Loving that. But look at this. So we've got Mempool, Norpool on there trying to compete. Poolin, again, not too sure about those. F2 Pool, one of the biggest, well, two of the biggest miners, F2 Pool and Poolin on there. Matterpool still on there. Making play, good to see them on there. BTC.com, again, shitcoin enterprise, we don't really want those on there. They can be squeezed off along with via BTC, thank you very much, because they're the ones that are artificially suppressing the price. Looking good there, but I mean, look, F2 Pool and Poolin on there, and BTC.com. Crikey, they are like some of the 3 biggest miners. Yeah, look, F2 Pool, Poolin, and BTC.com. I mean, these are huge mining operations. Huge mining operations on there. So, gesturing, maybe they know what's coming. Who knows? Who knows? But they are being squeezed because they don't know anything about Bitcoin. All they know is just simply plug in, get Bitcoin. That's it. Whereas this is all about competing and processing large volumes of data going on chain, which is something they've never had to compete for before. Oh dear, they're going to have to learn the hard way and up their game by adding proof of work. That's what it's all about. Yeah, loving that. Loving that. Great stuff. So talking about short positions, we'll just check them now. Here we go. Short positions on Shitfinex. Oh, look at this. Okay, so we started off, what's this, 92% short ratio. Where are we now? Ending on an 89%. Dear, oh dear, I mean, again, you know, dirty traders, 89% short ratio on Bitcoin. That's literally all I can say to that. Dear, oh dear. Let's have a look at the Bitcoin blockchain working live in front of our very eyes. So for any newbies who are fans of Zuby, Zuby's newbies, who might be watching the show, what you're watching here, the vertical rectangular blocks at the top moving across the screen, they are the transactions being recognized by the nodes on the network. Now, a transaction is recognized instantly the moment it is broadcast to the network. And it's recognized here as soon as it's picked up by 50% of the nodes, which is instantly because the Bitcoin network is set up as an ultra small world mandala network, which means literally, you know, transactions are recognized instantly the moment they're broadcast. The moment they are broadcast. It's it's an amazing system. And on here we've got the transaction generators, and then to the right we've got the transaction ID, the input, the output, the total output, the type, and the return. Once the transactions are recognized by the nodes on the network, and they are the mining nodes, they're thrown into the memory pool. which is where they are competed for by the miners and processors, payment processors, in order to create a block, put the transaction within the block, and then place the block on the blockchain, which is down here, where they are then rewarded with the Coinbase data, otherwise known as the block reward, otherwise known as freshly minted Bitcoin. And Zuby, if you're watching, as you can see down here, for example, in this block here, we've got a 98.43 megabyte block. And the highlighted box below that, you can see the hash of that block, the block height, who it was mined by, the size, the time, the date, the transaction count, and the total fees. So you can see that in that block, the total fees were $94.75. And in the future, it's this fees in the block which will eventually surpass the block reward, as the block reward gets cut in half every 210,000 blocks. Let me just show you this image. Hold on. Just to explain this more clearly, I know I have it here somewhere. Come on, let's get it. There we go. That's the one we want. Here we go, Zuby. So as the block reward gets cut in half, so initially it started out at 50 bitcoins per block, then it got cut in half to 25, then it got cut in half again to 12.25. Now it's 6.25. Next it will be 3.12. Can you imagine all these miners on Corecoin only getting 3.12 Bitcoin per block? They will never be able to economically sustain their network. But this here, this is transaction subsidy. So we are expecting a huge volume in transactions coming up. Yes, indeed. So, and then we have an economically self-sustaining system. As an intelligent individual, I hope you should understand what that means. It means the system can continue indefinitely. It's a beautiful system. A beautiful system. Let's have a look at charts quickly then. Any movers and shakers on here? Any more D drives? No? Oh, that's all right. Always worth checking. Always worth checking. Yep, Sentby still in 14. Peer Games and Twitch second and third. D drive still in first place though. Wow. So if you're wondering what's so significant about that screen, all you do is you just simply type in Bitcoin mining farms. All this that you see, look at the size of some of these things. All this goes towards the screen that you just saw, generating transactions and processing those transactions. You know, that screen may seem like not a lot to you, just like what am I looking at? But when you realize what goes into it and what it's illustrating, which is this, it's just absolutely sensational. Sensational. Blows my mind every time. Amazing. So now we're just going to have a look at BitInfo charts here. So look at this. So Bitcoin, 10.2% of the overall transactions. This is the entire crypto market, the entire shit show that we're looking at here. So really, if you want to do your due diligence, all you have to do is literally research these 10 coins that they have listed here, because there's literally no point in listing any other show. But while we're here, just to give an example of how stupid and ridiculous some of these other coins are, we're just going to have a listen to David Schwartz, who is the Chief Technical Officer at Ripple Labs, describing how he thinks XRP is same but different to Bitcoin. So have a listen to this.
Pleasure to have you, David. All right, so I was hoping you could comment perhaps briefly on this piece of news out this morning. Is Ripple hoping to find evidence that XRP is similar to Bitcoin and Ether and should not be considered a security?
Yeah, I think the primary argument that we're trying to make here is that the market considers them similar. We considered them similar. All of the evidence suggested that they were similar, and then the SEC just comes out of nowhere and say, nope, they're completely different. Ripple is a company. We're based in San Francisco. We have employees. We have shareholders. We have a CEO. I work for that company. I'm the chief technology officer. And it's a company like any other company. It's centralized. What the CEO says goes. There's a board of directors. It just works like any other company. The XRP is a digital asset. It's censorship resistant. It's publicly traded. It trades on the XRP ledger. Ripple does not own or control the XRP ledger in any way.
So how did Ripple then get all the XRP that it has? It has about half the supply. So just how did that particular transaction happen?
The XRP ledger has a very different design from what Bitcoin and Ethereum have, and many other digital assets. Like in Bitcoin, the stakeholders are at least to some extent the miners, and the miners like reap the rewards of the transaction fees. The XRP ledger doesn't work that way. It is not competitive. Nobody's competing to reap fees. Because it's not a competitive system, it doesn't have any way to sort of award fees to a particular party. Because although if it had a way to award fees to particular parties, people would compete for those fees, and it would become competitive. So the way it's design works is when the ledger first began operation, the 100 billion XRP, all that will ever exist, were sort of up for grabs. And lots of people grabbed XRP out of that system, but it just so happens that obviously, just like early miners mined, huge amounts of Bitcoin before the public knew about it or was using it, early XRP users grabbed large amounts of that pool of XRP. And so the people who developed the ledger wound up with, the vast majority of it, and then have been distributing it since then.
Well, Zuby, you really don't have to be intelligent to realise that made no sense at all. Same, but different. Can you just explain that one more time, David Schwartz? Here we go.
XRP users grabbed large amounts of that pool of XRP. And so the people who developed the ledger wound up with, the vast majority of it.
One more time, Dave. Come on, I love it.
The ledger wound up with, the vast majority of it, and then have been distributing it since then.
Right, so what you're saying is they made it and they took it. That's not a commodity. Oh dear, honestly. Just crazy. Hope you find that amusing. Again, not my words, his words. Took it right out of his mouth. So now we're just going to have a look at transactions here on our log curve that Dan Held loves. Log. Here we go. Look at this, Zuby. This is Bitcoin. This is when Bitcoin got its protocol backed from all these nefarious entities who want to centralize it and prevent it from working and turn it into an illegal enterprise and all this kind of crap. This is Bitcoin. Look at the progress that it has made. It was absolutely sensational there. And just so you are aware, Laura Shin actually did an interview with Dan Held recently, and she was explaining about the transaction fees in the block. So just have a listen to this. This again, you don't really need to be too intelligent to figure this out. Have a listen.
So, as you mentioned, at a certain point when the block reward stops, there will be a transition where miners will be compensated in transaction fees, not in the block reward. And the current amount that they earn is from fees is about 9% of the block reward. And so we'd have to see transaction fees 11x by roughly 2140, which is when the new Bitcoins will stop being minted. But I just wondered, if we don't see an increase in the amount of transactions that can happen at layer one, because the number of layer one transactions is limited. And right now, I feel like a lot of the scaling is focusing on layer two. Can transaction fees 11x in that time, or will that require people to pay a lot more per transaction?
The KPI for this for what we're looking at right now, which the question we're trying to answer is, are transaction fees replacing the block subsidy in the block reward? So are newly minted coins, are they, as those decrease, is that value being replaced by the subsidy? And so we can calculate that. That would be our primary KPI. So you could look at transaction fees over the subsidy, transaction fees in a block divided by the subsidy, and you brought up that's at 9%. If we look at that historically and we make it like a rolling 60-day to smooth it out a little bit, and we look at this over time on a log curve, it's very much trending in the right direction, where 11x sounds like a lot, but Bitcoin moves in really intense cycles where we've all seen it go from 1,000 to 10,000 or 20,000. When that happens, that means there's not an equivalent, but a directional rise in transactions and transaction fees. And so we have seen transaction fees replace the subsidy over time. And so it very much is trending in the right direction to where over the next couple halving cycles, we should see it start to predominantly be the value that is compensated to the miners in the block reward. If Bitcoin doesn't become adopted, if it remains a more niche sort of a service for humankind where only, let's say 20 million people use it, well, then its long-term security will be weak. If Bitcoin is the world reserve currency that doesn't have a strong security model, like there's not a lot of monetary compensation in the block reward due to transaction fees, well, will that be a bad scenario? Well, it's an impossible scenario, because if it is the world reserve currency, there'll be very, very many layer one transaction fees.
Okay, yeah. So it sounds like you think it is possible people might consider that because, or rather, it's possible that the amount in transaction fees will maybe not be enough on layer one to replace the block reward when the time comes.
There we go. Hope you understand that. It's pretty simple, Zuby. You know, an intelligent person like yourself, you should really get what's being said there. Let's have a look at the scaling test network. So again, this run, if you've not heard of this before, Zoobs, this runs parallel to the main net itself, where they obviously just stress test it and do all this kind of stuff. But as you can see on there, we've got the biggest block on the scaling test network is a 1.2 gigabyte block. On the main net, it's 608. I think I've actually seen it at 638. And transactions per second, we currently got 5,124 as the record recorded here on the scaling test network. Love it. Trends.cash. Look at this. TDX Pip still macking it hard in terms of apps ranking by money spent. Lots of money being spent on there. People gambling their money away. Apps ranking by performed actions. Again, so we only really know what... Oh, crypto fights, look at that. 26%. Crypto fights, absolutely macking it. Loving that. See if there's any chance for this. Crypto fights number 2, look at that. 22,851 transactions on crypto fights. Actions made, money spent. Oh, okay, testing the network. Loving that. But Zuby, if you're not really sure what this is, there is a multinational company called Worldline that have a turnover of $3.4 billion that are testing the Bitcoin network because they are a point of sale terminal business located in France. They're now testing the Bitcoin network for their services. Like, absolutely sensational. All of this in the pipeline. Very exciting stuff to come. Which is why there's a lot of stuff in here that we don't recognize because they have like weird names, you know, that B Drive or that. But they just don't want people to know they're testing the network just yet. Very exciting times. Crypto Quant. So let's have a look at this Zuby. So again, this is BTC All Exchanges reserves. So you can see they have been cashing out all of this year and all of last year. And this is what's caused the liquidity squeeze, which has caused a spike in the price. You know, but again, it's just a price spike. There's no value in this whatsoever. And the reason these guys are dumping it is because they know that people are eventually going to figure this out. So they're just like, well, actually, if we dump before it, it means that we still get, you know, we can still get some money for our reserves. So may as well dump it now before the entire market gets wind of it. They don't really care. They know it's got no fundamental value. And like, it's their dumping of it that's caused this spike in the price. Nothing to do with Michael Saylor, you know, bragging about how he's put, you know, how he's got like 90,000 core coin. There's nothing to do with it. You know, all this shit coin is going on about institutional investors and family offices. Absolute bollocks. You know, it's tether printing combined with the BTC reserves being depleted. That's the only thing that's causing it. You know, crazy. What's on chain? So again, I'll check this out. Estimated next block size 3.4 megabytes. Memory pool usage currently 7.8 megabytes. Just shows the utility on chain that Bitcoin is not a Ponzi scheme. And let's just check out. So this is what a memory pool is meant to look like. Data comes in, then it gets cleared. Data comes in, then it gets cleared. Data comes in, then it gets cleared. So it looks a little bit like Monument Valley. What it's not meant to look like is an actual swimming pool. Like this. Where they can't clear the data. Dear oh dear. And if you're wondering what results this you know, swimming pool of data has, well, let's have a look at it on TX Street. Check it out. This is the shit show in front of our very eyes. Look at this. So BTC currently with a memory pool size of 29 megabytes, of which they're trying to clear using 1 megabyte blocks. approximately every 10 minutes. Good luck with that. But look at this, the median fee, $2.60. So that means you're going to have to add that onto a cup of coffee if ever you wanted to pay for it. But not that the shop would ever accept it, because they would have to wait hours in order for it to be confirmed. And if you don't believe, like, you know, how ridiculous it is that they've actually, or how ridiculous they've made BTC, just have a listen to the CEO of Blockstream, Adam Back, explaining what he thinks is an acceptable peer-to-peer electronic cash system. So take the floor, Adam Back.
Hi Adam, I got a question from a live viewer. So it's from Arnhem. In Arnhem they have the Arnhem Bitcoin Stopped initiative, which has got like 100 restaurants and bars and shops and all these sort of, they're actually accepting Bitcoin today. So they're kind of struggling with the fee situation right now. So they're kind of looking for a solution that's ready today, like something they can use as soon as possible. Now, one solution you mentioned is to use off-chain services where people could, you know, put a little bit of money somewhere off-chain at some service provider and payments happen off-chain. The other solution would be to use an altcoin that has very cheap fees. Do you think one solution is preferable over the other, and if so, why?
So, you know, fee estimation in some cases is quite bad. You know, if you're paying a friend, you can probably afford to wait 4 hours and not pay a priority fee. So I'd encourage everybody to get a wallet that allows you to override and set your own fees, set them lower. Make sure to turn on replace by fees so that you could increase them later if you guess too low. Lightning, maybe they could be an early adopter of Lightning, but
that's not really ready yet, so.
Well, I mean, you can download and make transactions and stuff, but I agree that the wallet integration is not complete. You could have, I think some Bitcoin businesses have a tab, so you pay them and then you work your tab down and presumably you can cash your tab out if you don't use it, if they have repeat custom, or maybe the shops in the local area could make a shared tab or something in anticipation of, somebody in the local area who's a technology expert could make a local Bitcoin tab that's interoperable between the shops and some kind of app to do it.
Thanks, everyone. Thanks, Adam. There we go. Get some kind of a technology expert, because he clearly isn't one. Oh dear. So anyway, that's the crypto shit show, but let's have a look at our own shit show. So this is the amount of money that's currently being printed by the Federal Reserve, as reported here by the Fed, which is this is the Louisiana Federal Reserve. They're reporting the figures. So let's just have a quick look at this, and then maybe estimate a guess as to why there is just simply so much money being printed, and whether or not the Federal Reserve actually has any, or feels any responsibility for printing all this crap. So Alan Greenspan, let us know what you think.
Are U.S. Treasury bonds still safe to invest in?
Very much so. This is not an issue of credit rating. The United States can pay any debt it has because we can always print money to do that. So there is zero probability of default.
There we go. How nice is that? They just print money to pay the debts. Couldn't we all just do that? And as somebody pointed out the other day, if the government can just simply print $6 trillion in money, why do they need to collect taxes? Yeah, it's absolutely insane. The entire system is a farce. And is any of this money being injected into the economy, stimulating it, which we can see in the velocity of money? Let's have a look. And doesn't look like it is. Not since the end of the last financial crisis, and at the end of Q4 2007. And as you can see, they stopped reporting it here on Q4 2020 or 2014. But luckily, some of my spies have actually sent me updated charts. Look at this. This is what they don't want you to see. Literally dropping off a cliff. So where's it going? It's going into a massive bubble in the stock market, just dishing it out, shutting people up, paying for people's silence, hoping that nobody asks any questions. But, you know, we do a little bit of digging and you sort of like think to yourself, well, hold on a minute. I mean, they're printing all this money. You know, where could it possibly be going? Well, let's see if we can find out, shall we?
How can we seriously consider a $50 billion increase in the defense budget when DOD's own auditors say the department cannot account for $2.3 trillion in transactions in 1 year alone? Now, my question to you is, Mr. Secretary, what do you plan to do about this?
Decline the nomination.
I mean, $2.3 trillion, in 12 months. I mean, let's just work that out on a daily basis, shall we? Just for lulz. Here we go. So, 2.3. Crikey, that's a big number. So that's so it's 300 million. That's 2 billion. Here we go. 2.3 trillion divided by 365. So basically, they can't account for $6,301,369,863 per day. So they're missing $3.6 billion a day that they can't account for. What a joke! What a joke! I mean, let's work that out on a weekly basis, divided by 52 weeks in a year. So they can't account for $44 billion a week. And let's work that out in the months. So they can't account for $200 billion per month for an entire year. Oh dear, honestly, just absolutely hilarious. Oh. That's a joke. Yeah, incompetent. Yep, most definitely. So knowing that Bitcoin is the only thing that can save us, how are we feeling about it? CoinGecko feeling good, 58%. Oh dear, never mind. Let's have a look at BitPing, see how we're doing today. Oh, 52 countries. Helping BitPing, monitoring uptime of different services around the world. Loving this. Looking at all these nodes. Good. Love this. Paid out in BSV. Love it. Morning run. Let's have a look at this. This is the shit show growing in my own backyard. Luckily, 24-hour trading volume in the entire shit show here is only $3,200. But even so, you know, move fast and break stuff should not mean breaking the law. But, you know, that's the difference between techies and fundamentalists like myself who recognise the difference between commodities and securities and what should and shouldn't be tested. Let's have a look at the depth chart on BSV. Oh, look at this. Higher buying pressure, outdoing the selling pressure. So prices must be on the way up. Loving that. Let's have a look at BSV on Shiftnex. Oh, yep, on the way up. All right, let's compare that to CoreCoin. Looking very similar there. All right, so let's compare the two against each other. BSV versus BTC. Oh, kind of holding their own. Yeah, still pretty even. Stevens. Yeah, got a little cheeky trade on there with TDXP. Don't mind if I do. Why not? Yeah, just for lulz. So let's have a look at CoinCrap. Yeah, so we're just going to have a look at this over 3 months. This is BTC. Oh, look at that. I've heard all these shitcoin influencers saying, oh, we're not in a bear market. We're definitely not in a bear market. Well, let's have a look. Oh, down on the day. Down on the week. Down on the month. Down on 3 months. I think this looks like a bear market if you ask me. Oh dear. It's down in 3 months. You know, 3 months of losing money. Shitcoiners aren't going to be happy because all they're looking at is number going down because they don't understand what Bitcoin is. They're not looking at anything else at all. Again, I mean, all these shitcoins have no fundamental value, so I'm absolutely not interested in them whatsoever. Only interested in Bitcoin. Let's see. Oh, a little bit green there on the day. How are we on the week? Oh, up on the week. I wasn't expecting that. Down on the month. So that means we'll be down on 3 months. Oh, look at that. Lovely. Look at that. Does that look natural to you? Lovely, lovely little buying opportunity there. Oh, up on 6 months though. Loving that. Loving that. Good, good, good. Let's have a look at my own shows here. Oh, look at that. 80 new subscribers in the last 28 days. Thank you very much for that. But let's just check out my channel videos. Actually, we'll go to my channel. We'll go to... Actually, we should have gone to studio there, shouldn't we? 2 seconds. Let's just get back there. Videos. Let's see what comes up. Oh, here we go. This is what I wanted to have a look at. So check out some of these figures here. So Mike Winnett's video got 216. Look at this. Ellie Gonsley's video, 387. Stephen Matthews' video knocking on 400. Loving that. Loving that. So looks like Ellie Gonsley's did quite well there. Where are we in terms of Russell Brand? 238. Special one for Elon, 286. So that means people actually quite enjoyed the Ellie Gonsalves one. And Mike Winnett doing well, 216 views on that one. 200 for Tom Brady, only 145 for CoffeeZilla. That was a short one, so no pressure, Zoobs. But we'll see how good your video does with your thumbnail up on, well, your image up on my thumbnail. No pressure. No pressure. Let's have a look at my douchebags of Bitcoin videos. Here we go. Playlist. Let's have a quick look. Where are these? Here we go. Right. So Samson Mao 274. So let's have a look. So we'll compare that to Adam Back. Adam Back 267. So Samson Mao back out in front. Back out in front. Dan Held 258. Oh, closing in. And let's have a look at these other douchebags. Crypto Banter. Where are they? 242. Close one. Close one. That's funny. Oh, Ellie Gonsalves in. Obviously, people liking a pretty face. Let's see how it goes. Streamanity, let's have a look at 284 followers, going in the right direction. I made $2.40 from my last video on there. Excellent. Here we go, Zoobs. You can upload videos on that. I made $35 from my Stephen Matthews video. Great stuff. Let's have a look at Twitch. I know you're on here, buddy. But we're just on here to actually look at the statistics, as this is like my chart show. So we're going to go to Acorn Stacks. Let's have a look at Twitch signups in the last 24 hours. 78. Never mind. Yeah, a little bit on the low side, but that's because we've had over 1,000 in 24 hours at one point, which is pretty great. My followers, 410. 410 followers on Twitch. Loving that. Good, good. Let's go on to Twitter. So we'll have a look at some of these videos just for lulz. Here we go. So... check this one out. So 8.1 thousand views for Pomp's trolling video from Crypto Queen. Loving that. Daniel Krause's video there. Seriously, let's have a look at
BTC is valuable.
How many views has that got? Really? Stop the video. Stop. I was hoping it was going to give us the figures there. What? Maybe if we refresh that, we can just hover over the videos, see what figures they're getting. Here we go. Let's have a look at them. And they come up. So, so 5.8k views. And what about this one? Hey, Paul. Is that going to show us the numbers? Oh, no. And Michael Saylor. Oh, never mind. Never mind. So I have to open up those videos next time to have a look at those. Alright, let's just check out our girl Ruthie. Let's see how her tweet is getting on. RUTH. Here we go. Where are we? So the issue here is, will Twitter let it go for 960? Where are we now? Drum roll, please. 968. Oh, great stuff. Almost at 970. Loving that. Let's check out our man Satoshi. How is he doing? That was 78.5. Just hovering around that. You know, Twitter keeps taking his followers away, but still absolutely cracking there. 78.5 thousand followers. Loving that. Let's check out whale alerts. Let's see what's been printed in the last 24 hours. And any big movers and shakers. What's this Binance token? Oh my god. Huh. Packs, but we're looking for Tether really in USDC prints because they're absolutely insane. So 11 hours, nearly there. Halfway through. 19 hours. Oh, not too much going on the last 24 hours. Probably because it's bank holiday maybe. Oh, what's this? $1 billion of a USDT being burnt. Are they feeling guilty? $2 billion? They burnt $2 billion? Maybe they thought it was just ridiculous. What is it? Oh no, but look at that. So they made $1 billion. They printed $2 billion and then they burnt $2 billion. Oh, because they printed another $1 billion. So they printed 3 billion, burnt 2 billion, so they're left with 1 billion. Oh, what a joke. What a joke. Alright, so check that on stablecoin printer. Here we go. Yeah, so they printed it. Oh, so look at, they've taken into account, yeah, $1 billion. So USDT, another billion. Would you believe it? Absolutely crazy. Right then, peeps, so that'll do. So 1 hour show on the Magic Round Hour. That's pretty good. So we'll put this out there and see how Zuby music does on the thumbnail. So thanks for joining me. And yeah, as ever, be aware, take care, stay safe out there. Joy given. Catch you guys later. See you soon. Get paid for posting your pics on Relica. Download the app now at www.getrelica.com. Get your tweet etched on Twitch, forever on the Bitcoin blockchain. Do it today at www.jointwitch.com. BuyBSV.live, the best place to buy Bitcoin SV online. Support independent content creators on micropayment platforms such as Streamanity, Twitch and Relica. We should profit from our data, not the large corporations who track, monitor and sell it. If you enjoy the Bitcoin content that I produce, please support me by heading over to www.satoshi.tv, where you can keep up to date with all the latest news, gossip and content as it's created. Thanks very much. To get started in Bitcoin, go to freebsv.com, where you can claim your free Bitcoin. Then head over to Twitter and follow @IamSatoshi, where you can take part in his very generous and world famous free giveaways. The future of advertising meets the power of Bitcoin at Tonic Pow. Get paid for posting advertising campaigns to your social media profiles. Go to www.tonicpowads.com.